Today, I'm going to walk you through a simple yet highly effective EMA strategy that has the potential to bring you consistent profits. If you've been looking for a way to identify strong trends and make better trade entries, this strategy is definitely for you. For this setup, I'll be using two EMAs, exponential moving averages. EMAs are fantastic tools because they react faster to price changes compared to simple moving averages, helping us catch momentum early. I'll show you exactly how to set them up, how to use them to spot high probability trade opportunities, and how they can improve your overall trading decisions. So let's dive right in and get started. First, go to the indicators section on your trading platform. In the search bar, type EMA and select exponential moving average. We need to add two EMAs for this strategy. Great. Now we have two EMAs plotted on our chart. But before we dive into how to use them, let's customize their settings to make them more visually clear and effective. Let's start by modifying the first EMA. This will be our faster moving EMA, so we need to adjust its settings. Change the length to 8. This makes it more sensitive to price movements, helping us track short-term trends. Change the color to yellow. Adjust the thickness. Increasing the line thickness makes it easier to see and follow. Actually, I think a green EMA would be even better. Green is often associated with bullish moves, and it will stand out nicely on our chart. So instead of yellow, let's go ahead and change the color to green for better visibility. Now let's modify the second EMA. This will be our slower moving EMA, helping us confirm trends and potential reversals. Change the length to 14. Change the color to red. Adjust the thickness, just like before. Making it thicker improves visibility, so we don't miss any key movements. Right now, the candlesticks might be a bit too bold, making it harder to focus on the EMAs. By lowering the opacity, we can make them slightly transparent, allowing the EMAs to be more visible while still keeping an eye on price action. This small adjustment will help us see through the candles more easily, making it simpler to track the movements of our EMAs and spot key trading signals. The strategy itself is very simple and easy to follow. When the green EMA 8 period crosses above the red EMA 14 period, it indicates that the market is gaining bullish momentum. This means buyers are in control, and the price is likely to move upward. So when we see this crossover, it's a signal to enter a buy trade and ride the trend as long as the green EMA stays above the red EMA. On the other hand, when the red EMA 14 period crosses above the green EMA 8 period, it means that sellers are taking over and the market is shifting into a bearish trend. This is our signal to enter a sell trade, expecting the price to move downward. This crossover strategy helps us identify trend changes early and allows us to trade in the direction of momentum, making it a powerful and simple way to catch profitable moves in the market. Now that we understand the basic entry signals, let's explore additional confirmations to increase accuracy and filter out false signals. Another important point to keep in mind while using this strategy is recognizing when not to trade. Sometimes you'll notice that the green EMA 8 period and the red EMA 14 period are very close to each other, almost overlapping, or both lines appear flat and moving sideways. When this happens, it signals a no trade zone, because when the EMAs are too close together or flat, it means there is low momentum, indecision, or market consolidation. The price isn't trending strongly in either direction, making it difficult to predict the next move. If we enter a trade in such conditions, there's a high chance of getting caught in false breakouts or choppy price action, leading to unnecessary losses. So, the best approach in these situations is to wait for a clear crossover and strong separation between the EMAs. This ensures that the market has picked a direction, giving us a high probability trade setup. Let's take a look at another example to better understand the no trade zone. Notice how in this particular scenario, the green EMA 8 period and the red EMA 14 period are very close to each other, almost moving together without much separation. This indicates that the market is in a consolidation phase where there is no clear trend direction. This is a classic no trade zone, a time when we should avoid entering trades and wait for a clearer setup. Instead of forcing a trade, it's better to be patient and wait until we see a strong crossover with clear separation between the EMAs, indicating a fresh trend. By avoiding trades in these uncertain areas, we can reduce unnecessary losses and focus only on high probability opportunities. Let's take things to the next level by placing a live trade. This way, you can see exactly how the strategy works in real time and gain a better understanding of trade. By looking at the chart, we can clearly see a strong buy signal forming. Now, before we enter the trade, let's go over an important rule in this strategy. The red EMA 14 period acts as dynamic support and resistance. When the price is above the red EMA, it often acts as support, meaning the price tends to bounce off this level before continuing its upward move. When the price is below the red EMA, it acts as resistance, preventing the price from moving higher. To get the best possible entry, I always recommend placing trades as close as possible to the red EMA. This ensures that we're entering the trade at a strong support level in an uptrend, which reduces risk and improves our chances of a successful trade. Right now, the price is near the red EMA, confirming a solid buy setup. So based on this strategy, I'm going to place a buy trade right here and ride the trend upward. I'm going to add one more powerful indicator to our chart, the Parabolic SAR. This indicator will help us identify exit signals and maximize our profits by showing us when a trend is losing momentum. Dots below the price indicate an uptrend, suggesting we should stay in our buy trade. Dots above the price indicate a downtrend, signaling that the trend is weakening and it might be time to exit our position. I personally use the Parabolic SAR as an exit confirmation. Instead of exiting a trade too early, I wait for the SAR dots to flip to the opposite side of the price, which signals a potential trend reversal. This helps me secure profits and avoid unnecessary losses. C. Just as I mentioned earlier, the price bounced off from the 14 EMA, proving how well this strategy works. The red EMA acted as dynamic support, and now the price is moving in our favor. At this point, you need to make an important decision. Are you scalping for quick profits, or are you looking to ride the trend for bigger gains? If you're a scalper, the best approach is to exit the trade near the previous high. This ensures that you lock in quick profits before the price potentially faces resistance and pulls back. Scalping is great if you prefer short, fast trades with minimal risk. But if you're like me and prefer to maximize profits, then the goal is to stay in the trade and ride the full trend. Instead of exiting early, I let the trade develop and follow the price action for a bigger move. This way, I can take advantage of larger market trends and capture higher returns. It all depends on your trading style and risk appetite, whether you want quick, smaller wins or a comfortable holding for larger gains. For me, I always prefer to stay in the trade and let my profits run. As you can see, I entered the trade in the middle of the trend instead of at the very beginning. If I had caught the entry earlier, I could have secured a much bigger profit. But that's part of trading. Timing matters. Now, looking at the chart, it seems like the trend is coming to an end and the price is showing signs of reversal. This is where we need to be extra careful and follow our exit strategy to avoid unnecessary losses. As I mentioned earlier, I wait for the Parabolic SAR dots to flip to the opposite side of the price. That's my exit signal. And look what happened. The price touched the Parabolic SAR dot, and now the dots have shifted above the price, signaling that the trend is weakening. This is a clear indication that it's time to exit the trade. So instead of holding on and risking a bigger loss, I decided to exit here, cutting my losses at $136. Without further delay, I'm going to enter a sell trade because this time I want to ride the full trend and maximize my profits. Now, let's take a closer look at the signals confirming this trade. The Parabolic SAR dots are positioned above the price, which is a strong indication that we are in a downtrend. The red EMA 14 period has crossed above the green EMA 8 period. This is another key confirmation that sellers are taking control and the market is shifting into a bearish trend. This combination of indicators gives us a high confidence sell signal, meaning we can expect the price to continue moving downward. Look at this. This is a perfect example of how the red EMA acts as a strong resistance level when the price is trading below it. Whenever the price tries to move higher, it struggles to break above the red EMA and gets pushed back down, this confirms that sellers are still in control. This is exactly why I recommend entering the trade near the red EMA instead of chasing the price. Now, take a look at this. The price has reached the no trade zone where both EMAs have flattened out and are moving sideways. This tells us that the market is choppy and there isn't enough momentum for a strong move in either direction. When the price is in this kind of range, trading can be risky because there's no clear trend and the market could go either way. Additionally, I've noticed that the parabolic SAR dots have flipped to the opposite side, which would normally be my exit signal according to the strategy. But here's the catch. Since we are in a no trade zone, this signal is likely to be false, meaning the price might not actually reverse, but instead continue its previous trend. So instead of exiting the trade too early, I'm going to stay in and continue to ride the trend until we get a confirmed signal with strong momentum. This way, I avoid getting faked out by a choppy market and maximize my profit potential. If you're a scalper, this strategy can help you lock in quick and big profits within a short period. The key to scalping successfully with this method is timing your entries and exits wisely. Enter near the red EMA. Instead of chasing the price, wait for it to pull back towards the red EMA, which acts as a dynamic resistance in a downtrend. This gives you a better entry with minimal risk. Be patient and let the price drop. Once the price starts moving in your favor, don't rush to exit too soon. Give it some time to reach a key level. Since scalping focuses on short, fast trades, the best place to secure your profits is near the previous low, where the price might bounce or consolidate. By following these simple steps, you can capitalize on quick price movements, make consistent profits, and avoid unnecessary risks. Right now, my profit is sitting at $900. That's a huge profit to lock in, and it's tempting to close the trade right away. But remember, I always stick to the strategy. Instead of exiting too early, I'll wait for a proper exit signal, which in this case comes from the parabolic SAR dots flipping to the opposite side. Patience is key in trading. I won't rush to book profits just yet. I'll wait for confirmation from the parabolic SAR indicator to tell me when the trend is actually losing strength. Okay, now take a look. The dots have shifted below the price, signaling that the trend is weakening and it might be time to exit. This is the confirmation I was waiting for. So I'm closing the trade now and booking a solid profit of over $600. The best part? You can use this simple yet effective strategy on any time frame, whether you're a day trader, swing trader, or scalper. If you want me to demonstrate scalping using this strategy, let me know in the comments below. I hope you found this strategy valuable and easy to follow. If you did, don't forget to support the channel by hitting that subscribe button and turning on the notification bell so you never miss an update. Like, share, and comment. Your support keeps me motivated to bring more profitable trading setups and live market insights. See you in the next video. Happy trading!